Hi everyone, welcome back to my channel. If you're enjoying, I just want to say if you're enjoying these videos and would like to keep learning how I stay consistently profitable week after week, please be sure to give this video a like. It would also be a big help if you could subscribe to the channel and even hit the notification bell so you get notified whenever I post a new video. I'm really trying to grow this channel. I'm very passionate about trading. I've been studying charts for years now, and I've really been having a lot of success as of late, and I really enjoy sharing that success with you guys and how I do it and how I transition to being consistently profitable. So anyway, today I want to discuss how I prepare for the upcoming week every single weekend. And as most of you know, if you've seen my other videos, and if not, I primarily trade SPY or the futures. I like to trade micro ES as well. I also trade QQQ or micro NQ. I do really enjoy futures trading, but I want to try to focus on SPY and QQQ here because it seems that most retail traders prefer to trade those over trading micro futures. I want to do a video on why trading micro futures is more beneficial, but that's a topic for another day. So anyway, I when the week over the weekend before the week starts, so on Saturday, I really like to try to get an idea of where we're going to go. And as you can see, I have SPY on the left here, and then the futures, which is ES, and they move the same exact way. I mean, the price value is different, but ES is just 10 times the point value of SPY. And the thing that I like to have up when I'm doing a overview, so basically like a bird's eye view analysis for going into the week. I really do zoom in when the week begins and I start trading, but when I do my morning analysis or especially my weekend analysis, as you can see, I like to zoom out to the weekly chart first, and I make sure I have the volume profile because I want to see where volume is coming in at price. I have the simple moving averages because those do actually work as levels of support and resistance. I'm not sure if it's due to bots or if hedge funds use them or what, but they do work really well, especially on the daily chart. So it's nice to have those on your daily and weekly charts when you're doing an analysis there. And then I also have volume, and then I don't use RSI as much, but it is nice for spotting divergences and things of that nature. So I'll have it up there when I'm looking at the higher time frames as well. So with those indicators up, you can see this software here is called TradingView. I have volume, simple moving averages, volume profile, and RSI set to the 9 period, which is a little more responsive than the 14 period. You don't have to have these exact indicators. These are just what I like to use and the various metrics I look at. So as you can see, the first thing I want to point out is I drew Fibonacci here, and I drew it from the all-time high level to what I consider to be the first real pivot point that we had on ES. And just to show you how that's drawn, it's gonna help us determine how far we retrace for Elliot Wave theory. Elliot Wave theory is a very complex topic. If you want to learn more about it, which I highly recommend, you can do so on YouTube. There's plenty of resources out there, Investorpedia, there's books on it. But I want to show you how I measure the first wave. So if we click the all-time high here and bring it down to where we pivoted up, where we actually got a decent push up, you click the bottom there, and you can see when we went from point A to point B, then we had to go from B to C. So we did our little retracement there, which was clearly not a reversal. And the way you can tell that, which is the way you can always typically tell if it's actually a true reversal versus just a retracement, is the diminishing volume here. You can see that on both ES over here, you can see that on SPY here. Now, when we started moving higher, we went up a little bit above 61.8%, which that qualifies us as the B to C wave in Elliot Wave theory. As long as it's above 50% and typically stays below 78.6%, that does put us in the right range for Elliot Wave theory. So we had an idea, especially when you see this candle here, this high volume bear hammer, typically you want to call it. Maybe you could even call it a doji based on these wicks, but when you see this rejection here in the weekly, and you look at the volume profile, it lines up with these ledges, which are low volume areas. We typically will see rejections in low volume areas. You can see the same thing over here on ES, and then we just started plummeting down again, and that's essentially forming our next wave. Now, one nice trick you can do to get an idea if how far this wave will continue, and this is really amazing stuff. I mean, Fibonacci and Elliot Wave, it goes beyond just reading stock charts. It does go into like nature and human psychology and the math behind the universe. It's a wild topic. I really recommend looking into it if you're not familiar with it. Now, if we draw these down here, you can actually see, as expected, this wave has extended beyond the first wave, which can be pretty typical for going from C point to D point, and we're starting to dive into lower volume areas. And again, this is where we'll typically see a bounce. Now, if you look at the weekly chart, it's kind of rare that, I mean, when we had COVID, of course that happened, but it is rare that we break past the 200 simple moving average. Usually we get a strong bounce there on SPY, and I'll show you QQQ shortly. It's the same thing, but when we do break below the 200 moving average, I mean, we just fall hard usually, and I do think that's eventually going to happen. I do truly believe we are in a bear market. I believe that we have at least a year of downside ahead of us, downside and volatility, which is great because we can make a lot of money in all this volatility. That's an option trader and futures trader best friend is volatility. So nothing to be scared of. It's actually something to be very excited about. So I don't truly believe that we'll get down to the 200 SMA this week. I could be entirely wrong. So what I'm doing here is formulating a thesis. I'm not formulating bias, and it's an important distinction because I want to have a plan to play both ways, and I just want to have an idea of where we might go and how I plan to play those. So you can see here we're falling down. Now RSI on the weekly is making a lower low, going into the over sold area, and if we start to see that move back out, that could start to indicate a bounce. RSI is kind of like a self-fulfilling prophecy. A lot of people use it, so therefore it matters. I consider it to be a lagging indicator. I don't like trading on lagging indicators, but I do monitor it because RSI is so heavily used. Now, let's say we do get a bounce this week. What we could expect to see is, again, a retracement up above 50%. Anywhere between 50% to 61.8 is most likely, and you can see there's a nice volume gap right there, and then I would expect to see us plummet even further. And so that would be my guess, right? So on SPY, if we do get a retracement here, I do not think it's going to be a reversal. I think we're in for more downside. I think what we're going to see is what we saw before. Let me just clear out the Fibonacci here, which is candles moving up on diminishing volume, which shows the market makers, the hedge funds, the big money, the smart money stepping out, and we're basically moving up on, I guess what the term would be is dumb money, but I don't necessarily like that term. But unfortunately, the smart money steps out. People keep pushing it up because they get excited, thinking that the bear market is over with. They start buying. Those people don't have enough volume to continue pushing it higher. And then boom, the smart money comes in and just sells into that. Once all that liquidity's been created, and just plummets and makes a boatload of money. And the idea is that we want to be riding on that as well, and taking advantage of that move, and playing it both ways. So that is one possibility. Another thing I like to look at, and just to look at the daily too, I mean, you can see we're well below all these simple moving averages, so they don't even really apply on the daily anymore. They would apply, like if we start moving back up, there's a chance that the 20 simple moving average could be resistance. You can see here it acted as resistance before, so to get a big retracement, we're going to have to blow past the 20, and then to get to the levels that we were looking at previously. So again, we're considering the around the 423 to 428 range would be where we top out before moving lower. So you could see that would take us right up about to the 50, where we probably see a rejection as this area comes into play, and then move lower. So I mean, that's one theory. Another thing though, if we go over to Tradytics or whatever options flow tool you're using is, I talked about this in my very first video, gamma exposure. Gamma exposure has been huge this week. I have used it to have such a successful week, knowing exactly where we were going, where we were ending, which levels we would likely see reversals at. And you could see we had a big options expiration event on May 20th, on Friday, and everything changed. So now if you look at this, biggest gamma level is 390. That is going to be acting as a magnet level. 380 will probably be a low where we can see a bounce. So like if the week starts off and we start dropping, and just to point it out, we are right at 390, of course, because that is the biggest gamma level. And if you were watching this throughout the week, like I discussed in my very first video, you would have seen this level growing, and it was pretty clear, especially when in Tradytics. Again, it's one of the best things about using this tool. If you were looking at the market net flow, I mean, it just made it so clear what was happening. So we had the gamma level at 390, and then boom, on the market net flow when we dropped to a certain point. So I mean, the lowest we did actually get pretty low on Friday, and so when we made our low, got close to 380, which is a big gamma level, and then all of a sudden we started moving up. We saw a momentum shift. We saw these crosses, and boom, we fired all the way back up to 390, which was really no surprise. And if you were paying attention to the gamma exposure in this market net flow, you could have held this entire move, no problem, no sweat. What an amazing day Friday was. So anyway, if we go back, if we start to drop, I do think we'll bounce back up around 380. And then if we get above 390 and we really start moving, we'll see how this stuff starts filling out. But I wouldn't be surprised if we do actually push up to the levels we talked about previously. Now, I'm not a big fan of max pain theory, but it is something to consider. I mean, you could see June 1st max pain is 410, which is totally reasonable that we get there by then. So I'm just trying to think of how the days might go, what to expect, and how I plan to trade it, and what the big levels are going to be. So 380, 385, 390, and then potentially looking for a bullish bounce based off of the retracements and the Elliot Wave stuff that we just talked about. One thing to note about Elliot Wave is if we do get that bounce, that would be so we have A to B, B to C, C to D, D to E, and then we would start actually getting some sort of corrective wave, or after another big move down. It's kind of amazing how that stuff pans out. But again, I don't want to make this video too long, so moving right along, let's do the same thing with QQQ. If we do, so you can see I already have the fibs drawn here. This one's actually even cleaner. I mean, you could see like we dropped down and then we went right back up to 61.8%. And then if we draw this, I mean, this really looks like we're going to get a bounce. Now, it's almost identical. And again, I would expect us to actually get down to the 200 SMA again because of the ledge here, the volume dropping off, which typically is where we'll see a bounce, and just how well the 200 simple moving average holds when QQQ stops dropping. Now that being said, you can see here it's held before when we, again, just like with ES and SPY, when we get below it, big moves happen. But a lot of times we'll either hold at it or slightly above it. So I think another bounce is coming. By no means an end to the bear market we've been seeing, but just a retracement to create liquidity, to fool people into buying, and then to take advantage of that by big money selling into it. You can see RSI dropping, and just to show you one more time, if we draw it from the top to the bottom, we can see here that we retraced up to 61.8. This one isn't as clean, but if we go down, you can see these waves are exactly the same size right now, which is very interesting, which oftentimes you will see bounces when the waves equal each other. Now, if we look at the daily here on QQQ, again, we're below these levels. Expect the 20 to act as some sort of resistance. We might bounce back up to the 50 if we do bounce before moving lower, which would be the low volume areas, these low volume nodes. I love playing volume profile, whether I'm looking at long-term charts or short-term. I'm going to do an entire video about volume profile and how powerful it is, especially when you bring in this little tool, which is called the fixed range volume profile, which can show you what volume looked like and where the point of control is, where the most volume came in at certain levels. It's just such a powerful tool, especially when you're trying to play retracements to market structure breaks, which we'll get into in another video. There's so much I want to cover, so please do make sure you like, subscribe, and hit the notification bell. Now, let's look at the gamma exposure again. 280 being the biggest level. We closed at 288 this time, and you could see here if we look at 290, so 280 is the biggest level. So if SPY starts dropping down to 380, I would not be surprised one bit that QQQ drops at 280, and again, that is where we get a strong bounce. Now, I have noticed with the gamma, with the GEX levels, that we tend, like SPY and QQQ are strongly correlated. They move together incredibly well. It's astonishing. I mean, that's largely due to them having a lot of the same top holdings. They do have small differences. I think it's like a 96% correlation. But I have noticed that SPY tends to be the driving factor. So if they both have big gamma levels and they're offset like this, one lower than the other, we'll drop down to the big one on QQQ, and then we will magnet back to the big one on SPY. And that's just something to consider. If we look at max pain strikes for the upcoming part, 300, 308. So that is interesting. Again, we might dip a little more before we do get a somewhat of a relief bounce. Now, another big thing, and this is just the overview, the bird's eye view, prepping my thesis. Now, if we look, I keep these up at all times. So not only do I have the market net flow from Tradytics up at all times, looking for these crosses to make my big moves, but momentum to do my lighter scalps. But even when I'm playing level to level, so taking shorts here and riding it down, taking shorts here and riding it down, as I'm doing that, I keep up VIX, XLK, XLF, and XLY. And the reason is because these are the biggest sectors. And you can see I even plotted the gamma exposure on all of these with these purple lines. And what I like to see is whenever SPY is holding a level that I want to take a trade off of, I look to make sure that VIX, which is the opposite of SPY, it's an inverse relationship to SPY. So if SPY is going up, you want to see VIX going down, vice versa. So if I want to see a level hold, before I play that, what I always look for is I look for the level to be holding on all three of these sectors. So XLK, XLF, and XLY. That is technology, financial, and consumer discretionary sectors. And the big one for XLY is going to be Tesla. That's a lot of people think that's tech. That's actually an XLY. So if these three sectors are holding a level at the same time that SPY is holding a level, and VIX is holding a level as resistance, so say if I wanted to take a call or a long because I think it's going to move higher and it's going to hold a support level to move higher, I look for these three to hold a support level, and then I look for this for VIX to be holding a resistance level. And if I see those four things lining up with the overview of market net flow sentiment and lining up with the levels that I've plotted on SPY or SPY, QQQ, or NQ and ES, then I have full confidence to take a trade. And that does happen pretty often. You'd be astonished. It sounds like a lot, but it happens all the time, and it's the huge part of my strategy, having that market awareness. I am constantly flipping over and checking these out. I have these on another monitor typically, so I can see them at a glance and just make sure that everything is lining up. Now, and that's another video I'll do. I'm going to do a whole video on volume profile, a whole video on market awareness, and a whole video on volume price analysis and playing level to level. And then I want to do like live trade videos tying it all together. So the last thing we can look at here, on Tradytics, if you go to the stock market overview, You could see the sector flow here, sector rotations, and this is based on the main sector ETFs. We just looked at some of those here, and you can see I did leave I took energy off. This one has actually been the best sector overall for a while now, and in this case I left on SPY, I left on XLC communications, which I do not typically watch, but I left it on there because that one does have some big tickers as well that influence SPY and QQQ. And one thing I should also mention in terms of my market awareness when I'm trading, not only am I constantly glancing at VIX, XLF, XLY, and XLK, but I am also watching SPY and QQQ side by side, or if I'm trading futures, I'm watching ES and NQ side by side, because they do respect each other's levels. If you see SPY getting held up on a breakout and all the sector stuff that I just showed you is lining up and VIX is lining up, and you're wondering what the holdup is, it's probably stuck at a level in QQQ, and once that level breaks, it's going to move. But anyway, so if we look here, we have XLF, XLK, XLV, and XLY. Now, XLV is also another part of SPY. I don't watch it regularly while I'm trading, but I do like seeing what's going on with it. You can see XLV. So that's healthcare. Let's just cross some of these out so we can see what's going on with it. So as SPY starts to kind of slightly turn around here, we got a big move back up at the end of day Friday, which we just went over, but XLV seems to be driving that. And there's some talk that I was talking to one of my buddies who's a professional trader, very good at trading, and him and I are actually talking about getting a trading group together that I'm excited to share more about when that happens. Now, as you can see here, it's starting to turn around, and this could be a sector to pay close attention to. One of my favorite stocks that I love doing the wheel strategy on, selling puts and selling calls. So if I don't own shares, I sell puts. If I own shares, I sell calls, is ABV, ABBV. And I might actually get in here and sell some more puts. And if it moves up and I don't grab it, I just keep the premiums from those puts. And if it moves down, I just let it get assigned and I pick up the shares. And then it also has dividends, so I can collect those dividends while I'm waiting and selling calls to make premiums on the call side. And I'll do a video on how I wheel strat my long-term portfolio with dividend stocks and how effective that is for making a lot of passive income. You can probably you'll blow away your 401k or Roth IRA or whatever you have with this strategy. Anyway, so I'm sorry, I said you'll blow away the performance on those, just to be clear. And if we add these sectors back in, what we really want to see if we do get some sort of bounce is all the sectors are going to have to kind of rotate up with it. We're not going to get that relief bounce if they don't start moving with it, and that should right away get some ideas turning in your head. Like if we start seeing XLK, which is tech, getting a little relief bounce with SPY and QQQ, do not be scared to maybe play some weekly calls on names like AMD or Nvidia or Amazon, Apple, Microsoft, things like that. They move with their sector, they move with SPY, they move with QQQ, and they're great ways to make extra money. And you don't necessarily have to day trade them. If we're getting a relief bounce, you can have a little more confidence in holding them, but you do need to be careful, because I can't stress enough, when we get a relief bounce like the one we had on March 15th to March 30th, right? I saw so many people getting excited about this move up, and I was just shaking my head, because you can clearly see, it works both ways. If you're going to keep moving up or down, you need volume pushing in that direction. And you can see, like as we move down here, volume just kept increasing. Now it's finally starting to decrease, and this long wick here with this high volume, that's considered stopping volume, which also, once again, makes me think we might be getting some sort of relief bounce. We really have to see what happens Monday, and we have to use our gamma levels and our market net flow and our sector awareness to play these big moves. But if we do start seeing a move up, keep an eye on this volume. If you see it diminishing like this, you are going to get a rejection at some point, and it is going to plummet, and it's probably going to plummet harder even harder on that last wave, just as hard if not harder. And so you see that diminishing volume at time down here. You see it get up to a low volume node like right here. You see a low volume node right where we rejected. Just know that, okay, we're going back down. That smart money has stepped out and they're getting ready to sell into the retail traders who have been buying this whole time, and they're just going to drop it and make a boatload of money doing it. So anyway, that's what I've got for the weekly prep. I am prepared either way. Like I said, just to recap one more time, I think that if we move down, if we do get a move down on SPY, we'll probably stop somewhere around 380 and then move back up to 390. If we break above 390, we could see a potential run up to the 423-ish area, somewhere around here. Or actually, I'm sorry, maybe even 429 if we get up here to this low volume node and get stopped at the 50 SMA. But point is though, VIX is still extremely volatile. You could see, I mean, VIX is still above 20. It is dropping right now, and it is wicking out to the top. So I mean, as VIX comes down, the volatility drops and SPY moves higher. But at the same time, if you look here, we can draw a parallel channel here, and you can kind of see like we have this little uptrend here, and I don't think that trend is really gonna break at any point. I think if VIX comes down, it's gonna stop above 20 and then shoot back up. And if VIX gets above 40, just FYI, puts on everything, go hard on puts, like no looking back. You will make a boatload of money. Puts on options and shorts on futures, and just load up if you see VIX break above 40. That would be massive. And just one more thing before I let you go, you can see this downtrend here. This is another indicator of where we would top out if we get a relief bounce. And you can see if we came up once again right where we talked about roughly. So let's go back to the daily here. So I don't think we would actually get this high. I think we would get stopped right around here at the absolute most if we had a relief bounce. But I guess this is all just to get my mind right for a week. For the upcoming week, I take it day by day. It's very important you play what you see. You do not want to have bias. You will get killed if you have bias. You need to just have an ever-evolving thesis and change it as needed. So anyway, I hope that helps some of you guys. Hopefully you learned something, touched a little bit on Fibonacci and Elliot Wave and trends and volume profile, and how to watch sectors that control these tickers that we love to play: SPY, QQQ, ES, and Q. So hopefully if you learned something, once again, please leave a like at the very least. Feel free to comment and ask questions. I want to engage with you guys more. I love helping out, and I do tend to live stream this. Oh, and so I don't know if you're here, Professor Ed, still, but these gamma levels get updated. So that's one really nice thing about Tradytics. I used to use a different service, and the gamma exposure levels did not update on the fly. They would only update once the market had closed. I noticed the other day that these gamma exposure levels update throughout the day, which is incredible. And because of that, consistently around 1 p.m., I have pretty good confidence on where the market's going to close. And I kid you not, when the market was dropping on Friday, and we saw this move happening, and the 380 was a big gamma level, and it was not as big as 390, and 390 kept getting bigger, and it just gave me a really strong suspicion that we were going to close at 390. And then once we had this market net flow cross, boom, it shot up, which was pretty amazing. But yeah, with Tradytics, they do update throughout the day, so make sure you refresh this page. That was a great question, so hopefully that helps. Keep an eye on both these things. Other services, they do not. But Anyway, thanks again for watching, guys, and I will try to get another video out as soon as possible. I hope everyone has a great rest of the weekend, and talk to you guys soon.